Welcome back. I am Shilpa Revankar. Welcome to my series of videos on international financial management. In our last session, we have discussed about the international trade flows, capital flows, the factors influencing them, what is balance of payment, the different components of financial payment. So we'll continue this topic of international fund flows by talking about today the different agencies which facilitate international trade flows. So to start with, we'll just list down the different institutions which help to do so. So these institutions include IMF, that is International Monetary Fund, World Bank, World Trade Organization, that is WTO, International Financial Corporation, International Development Association, Bank for International Settlements, OECD, and other regional development agencies. So to start with, the first one, International Monetary Fund. So we'll talk about its brief history when it was started. So IMF was formed in 1944 by United Nations Monetary and Financial Cooperation Conference held in Bretton Woods, New Hampshire. The member nations were 188. Out of that, 24 were executive directors, means 24 member nations, so called as developed countries, were the executive directors. Then it is based in Washington, DC. So why was this IMF started? So as I told you, it is an institution which tries to facilitate monetary systems worldwide. So basic objective here is to promote cooperation among countries on international monetary issues. So what can be those like? For example, they help in stabilizing exchange rates. So they give strategies of and ideas, flow of funds, so that individual countries can maintain a stable exchange rate without much ups and downs. It also provides temporary funds in times of loan to member countries so that they can correct the imbalance in international payment. International payments means if say the export import deficit is there, so they will provide temporary loans to them so that they can balance the deficit. It also wants to promote free mobility of capital funds. So basic objective of IMF is globalization and liberalization, so that any country can go and invest in any country. So there is free flow of capital across countries. Also, it is trying to promote free trade. Means there shouldn't be any trade barriers. The whole world should be one place, something like that. Then there is a thing called as quota in IMF. Now, quota is nothing but a stipulated amount or a stipulated, you can say, quota in the sense is the maximum limit of anything, maybe withdrawing funds or taking loan. So each member nation in IMF is assigned a quota based on various factors, based on their net per capita income, their GDP, how is the economic cycle there, all these factors and their contribution in the world economics. On basis of that, they are given a maximum limit for raising funds or taking loan from IMF. Members are required to pay assigned quota. So you are a stakeholder in the monetary fund. So based on your capability, your company's GDP, that country is going to give amount. So it is like a stakeholder. It also depends on, so I told you before, based on this quota, even they can take loans or borrow funds. There is one more concept called as SDR, which is called as a special drawing rights. Special drawing rights are unit of accounts allocated to member countries to supplement currency reserves. So SDR value fluctuates in accordance with value of major currencies. The special drawing account means they can draw certain amount from the IMF to if there is a shortage of currency reserves in a country, they can use this and withdraw money or take a loan from IMF. The SDR value fluctuates in accordance to major currencies. So if the major currencies like dollar, pound, the value increases, it will also increase or decrease depending on that because it is directly assigned with it. The next concept is CFF, that is compensatory financing facility. So I told you one of the key objective is to promote exchange stability and promote imbalances in their deficit account. So CFF is a compensation, say you can say as temporary loan given so that if there is a trade deficit, that is exports are less than imports, countries can use this to stabilize their economy. So it is mainly helpful for developing countries. Next important agency of world economics to promote and stabilize monetary system is World Bank, also called as the IBRD, that is the International Bank for Reconstruction and Development. It was also established in 1944. The primary objective of World Bank is to give loans to countries so that they can work upon to reduce poverty in their country and also to enhance economic development. Say, for example, for infrastructure projects, to build dams, to come up with major industries. So it is trying basically to reduce poverty and increase economic development. The main source of funds is sale of bonds. So whatever loan the World Bank gives to its member nation, the funds come from sale of bonds. So they are selling bonds. As I told you yesterday, in a previous class we have talked about the bond market, commercial paper. Similarly, World Bank sells bonds and raises funds. So bonds in the sense, loan instruments from individual private companies or also from governments. So whatever bonds they are purchasing, the money comes in, that is used for funding or giving loans to the needy. World Bank, no doubt, is its objective is for reducing poverty and economic development. It has a profit-oriented philosophy, means it is not undertaking any projects or giving a loan to such a country where there is a chance of loss. One key concept is there in World Bank that is called a structural adjustment loan, SAL. It's a basic mission and it was established in 1980. It is in its main intention of structural adjustment loan is to enhance countries' long-term economic growth. So it is giving loans for huge projects for the time period of 10 to 20 years, so that that country can develop its infrastructure and undertake major projects which will enhance the long-term economic growth of that country. It also has one more system called as co-financing. So co-financing means as we all know that co means mutual or in partnership with. So World Bank in partnership with other small private public agencies, export credit agencies, commercial banks will finance big projects. So a small portion is financed by World Bank and the remaining part is collaborated by commercial banks and export agencies. So it is working in collaboration with other agencies, and this system is called as co-financing. Next important organization is World Trade Organization. So you know that GATT, that is General Agreement for Tariffs and Trade, was created in 1993 so that it will help international trade. So later this GATT was converted into WTO, that is World Trade Organization, in 1995 with 81 member nations. Here in WTO, member nations sign agreements so that they can facilitate international trade. Each member nation has a voting right and they can raise their queries and come to a consensus, or even they can go against a particular strategy or policy of a particular country, so that internationally individual countries may not face trade deficit. Next one is International Finance Corporation. It was established in 1956. Here its key role is to promote economic development, but it is not helping the government bodies, that is the state or central government bodies, but here their main customers are private. So World Bank gives loan for economic development to government bodies, but IFC gives loans to private enterprises, and it provides 10 to 15% of the funds required for that project. So it is just a catalyst rather than a primary supporter. Means it is not funding most of the project funds. It is just giving a part of it, hardly 10 to 15%. So we say it is a catalyst. Catalyst means a thing which is trying to say any substance or any component which is trying to create a reaction, means initiate a reaction. So when IFC is giving 10 to 15%, so normally other commercial banks and all will come up to help the private enterprise in that projects, because a big world body like IFC is funding. So it is giving, you can say, it initiates the funding process, but and attracts other banks and institutions to support that project. That's why we call it as a catalyst. The next one is International Development Association. It is IDA. IDA was created in 1960. So it's, I can say, objectives are similar to World Bank, that is economic development, reduction of poverty, giving long-term economic development. But here the main customers are less prosperous nations, or you can say underdeveloped nations. So IDA helps, the target is not the developed and developing countries, but it is rather the underdeveloped countries who cannot qualify for loans in World Bank. Then the next one is Bank of International Settlements. So Bank of International Settlements is called as a bank, central bank of all other central banks. So like, for example, in India, we have the Reserve Bank of India, which is a lender of last resort in India. Means it is the ultimate bank to which all other private and government banks look upon in terms of crisis. So it's a central bank for everybody in India. Similarly, internationally, we have one more bank which helps other individual countries' central banks if they have any problem. And that's the reason it's called as Central Bank of Central Banks. So it, along with cooperation of other central banks, it helps countries with regard to international transactions, say for example, foreign currency reserves, trade loans and all that. So it's also called as lender of last resort, because when say the central bank of one particular can't do it, it can see or raise its hands towards a bank for international settlements. Then the next important organization which facilitates international monetary system is OECD, what is called as Organization for Economic Cooperation and Development. It facilitates governance in governments and cooperation of countries' market economies. So it will tell how governments should perform the administration so that they can reduce wastage of resources and increase the efficiency of the funds they are using. It also helps in us opening up the economies or globalization of the economies. Then regional development banks. So as we have banks at the world level, we have huge banks at the region levels also, which help in the development of that particular region. Say, for example, Inter-American Development Bank, which focuses on Latin America. When you say Latin America, it is basically Central America and Southern America. Then Asian Development Bank. So this is a bank which looks or takes care of the needs of Asian countries. Similarly, African Development Bank, which is precisely for African nations. Then also for Europe, we have European Bank for Reconstruction. So these agencies are, their main aim is to take care of the needs of that particular region, the economic development, the funds for trade, for international funds, and so on. So it is more so precise to location in that particular area only. So this is all for today. I hope you have all understood. Please comment so that you can raise your queries. Also like, subscribe, and comment on my channel. Stay tuned for future videos. So that's all for today. Have a good day.